What's up, guys? I want to talk a little bit about scaling in. Friday we flushed after this bull flag failed, and once you kind of miss that, you can't scale in. You just buy 10 contracts, 2 contracts, and go for a ride. All right. If you can stomach these pops for drops, great. But once you get in here and maybe you're selling, okay, you're in, out, whatever. Now you're buying a pullback. You're scaling into these pullbacks, buying puts, buying puts, buying puts, and as soon as it starts to wick and lose it, you're selling what you scaled in. You're maybe buying 2, 4, 8, right, or 1, 2, 4. That's how many contracts you're buying at a time. And as soon as it starts to move down, you just bought 4 up here, so you're selling 2 to 4 and holding, right? You're scaling in here, selling. Now, if you are opposite, let's say right here on this blue line, and you're like, all right, hey, we're kind of making a double bottom here off of this blue line. I'm going to start to scale into calls. See here, the body candle bodies were below this pre-market level, and then they were below the blue line. So it's super bearish. But here, we didn't get the candle bodies that low, right? So you're scaling into calls. As soon as we get above this candle body, I'm buying more calls. Cool, we got this move up. Blue line, first target, I'm scaling out. You know what? This candle body is closing below the blue line. I'm out completely. Okay, I just said we got in down here. So you have 72 cents to like, what is that? 72, that's 30, 40, about 50 cents almost to figure out what you're doing. Now this candle body here lost right there, right? This one here rejected that top candle body. Candle bodies and the relationships with the other candles' wicks are huge. This wick just wicked off of this candle body right here. Okay, so even here, if you're like, I'm in puts, this is a big move down. You buy 2. Now you buy 4, and you're like, my stop loss is going to be here or the blue line. Now you're in 4, right? Instead of being down 30%, you're only down 15, and you start to get that move all the way down. This is your first target. I would sell half, at least here, at least half. This is just a big flush. You probably caught, maybe it goes all the way to the blue like this one did. But that's how you scale in and out. Now, if you're scaling into calls, okay, you go, hey, we have this this wedge happening here. Maybe we wedge off as support. So, same thing that happened here, right? It was a weak bounce though. Okay, let's see how strong or weak this bounce is. I'm back in calls. I bought 2 of them. Little pullback. All right, if we get back above this candle body where I got in at, maybe I'm in more. You buy 4 more, maybe. Yes, you're averaging up. Doesn't matter. 200 EMA, always a fluid target. We didn't really get up to the blue line there. Let's say you fumbled the bag and you still are in. I would definitely buy 2 more here because we're still above this entry, right? Or buy 4, whatever. Scale in. Tough to hold these retraces, but we did eventually get up off the blue line. And if you buy 2 and then 4, you could even buy 8 more here if you really are aggressive. And you're buying every pullback because you're making higher lows. Okay, so you go here, and you went here. Now you're buying all those higher lows, okay? Now, there's something called the rule of threes, which after something happens 3 times, something bigger should happen, okay? So we have 1 touch here, really. Not really a touch, but kind of right here, right? See how we came and retested? That's like a touch, 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 okay? Look, 1, 2, 3. After the third one, we launched up. This could be considered the third if you don't count this. 1, 2, 3, and then we flushed down. Now, this is what I've been going over in lives a lot too. You have the rip before the dip, okay? Better way to say it, pop before the drop. We popped here, 0.52 to popped here about $1, I think. 0.50 to yeah. So about $1, and then you get a drop down, even lower. Something like this, okay? I want a lower high. If this would have came down here and made a new low, I think we would have launched up, okay? Because we get higher before we get lower, okay? And we get lower before we get higher. See how we went here below this spot before we went above this spot, it's always this whipsaw. So here we go here, made a low, but not a lower low. Here we actually kind of went under and then launched up even higher. Okay, so that's why we scale in. It's much easier with like 1 day options because with 0 days, by the time it happens, you could already be so messed up on theta that you're just, you're buying into something that is never going to be profitable again. But if you do that, you can roll down. And rolling down is when, let's say I'm in a 520 call here. I sell most, but I still have 2. Okay. Now, let's see, 520, it's going to be like 520.5. Now you can buy like 520.5 as this move happens here. It's more out of the money. Okay. My point is you don't have to always scale in on the same strikes. All right. I'm not doing a good job of explaining it, but you don't have to scale in on the same strikes every time. Okay. So it does get easier on the selling because when you have one strike, you can just click flatten or sell at once. But let's take a look at another ticker for this scaling in and scaling out situation. Okay. So I had Tesla calls here. Okay. I got in here. I sold here. I did have some runners, and I was like, I'm out if it hits the blue line, which it did. I lost that. Okay. Not really, again, not a good example of scaling in, but I'm just looking at the price action here. So here's scaling in. All right, that's not a good example at all. Let's check out NVIDIA, which didn't move a lot. Did not move a lot Friday. Okay. So here, this is like you're buying puts. The blue line broke. This is an awesome example. The blue line broke, and it starts to bear flag. Well, if you look at it in real time, we went all the way up here, and we got some people out. Okay, let's take a look at this. They're looking right over here. Okay, I'm in puts. I'm in my first buy. Right? It didn't even show it because it's the 5-minute chart. Let me go back to there. I'm going to go to the 5-minute, maybe the 2-minute chart. Okay. So we're watching this climb. It just wicked off and then up. That was a perfect example of a scaling. Buy it. Buy more calls. Even there, you scale in. You get a move up. Here. Oh, shoot. Bad data. SPY's dropping. If it breaks the blue line, I'm in puts. Okay, I'm in puts. Crap. I bought 2. Let me buy 4 more if it pops up. Is it going to pop up, or did I miss the pop-up? I think it's going to pop up. No. Well, I was trying to illustrate this pop-up here. Okay, so let me go back to here. Okay. So we lose the blue line, and no, it's not even going. We lose the blue line, and we're in puts. Oh shoot, I'm in puts. Shit. Right there is like you buy 4 more, okay? Because you're scaling in to this pop, and it's still in that bear flag, and it's still off the top, okay? And then you're like, if we lose the blue, I'm out of my entire play. All right. I thought it would be much easier to explain on a replay. Maybe on the 1 minute. The point is, see how it popped up after we lost the blue line? Here, I'm fine. I'll go to the 1 minute. I hate the 1 minute, but I'll go to it. Okay. So we pop up above the blue line. You're like, I'm in puts, right? This is where you're buying. You have 2.5 minutes to buy. Clearly, if you bought here, let me take this off. If you buy here, anywhere you're like, oh, we're losing it. All that happened is this. Look at how many retests happen in 1 minute. On the 1 minute chart, I mean. You establish this, swing high, swing low, right here. Look at this bar, retest this. It retests it and launches up. Flags, this is a 1, 2, 3, 4 minute bull flag, launched up. Even right here, you're in calls. Add more calls. See those top wicks? I'm adding more calls here, and I'm holding above the last swing high. This is where it has to hold, which it did hold here. But before it retested, it launched it up and made a new high, right? So here, it retested this spot right here. At 6:41 a.m., 7 a.m., and 7:02, it retested that multiple times before losing it finally at 7:07. So once you get in here to puts and it retraces, it's the same story up here. Came here, tried to get above with even a little hammer on the 1 minute, lost it. Look how it retested. See how it retested that spot? And this is where you're adding more puts for the drop. Now when it drops to here, yeah, you're up a lot, but I promise you you're up a lot more going from here to here than you are going from here. Because we even popped up here. This takes away premium. That takes away premium, but it never got to these ads. Okay? So you scale in that way and you stay in control of the trade. Sorry for moving the chart around a lot, but you're like, if we continue to fall, I'm still buying puts. Okay? And you just, in your head, mark, that's where we're at. Okay? That's where we're at. The biggest drop came here. Because look, I just told you guys, we bounced off of it, bounced off of it, bounced off of it. This big bear flag was lost. And you got this VOMY, V-O-M-Y, VOMY, which is when you get lower highs and then a waterfall flush. So that is how you scale in that way. Now, if you're like, I'm in calls above this blue line, let's just say, and you add 2 contracts, you're trying to do my scale in here, and it launches, you just caught a move with 2 contracts. That's it. There's no scaling in because we never retested anything. If you're chasing a move, it's very tough to scale in and maybe impossible. Okay? So, I hope that's helpful. If you're chasing, probably not scaling in. If you're dip buying, it's a must. Love you, bye.